So I take a few days off to relax, and I come back more stressed than when I left. Look where rates are today. So my name is Dan Frio. I do this report every day. Why? Is to basically inform you guys everything in real estate. What my goal here is, if you're looking to buy a property or refinance a property, maybe your first home, maybe your first investment property, or you might think of, well, I need a debt consolidation, any kind of mortgage you need, we're here to help you, okay? My goal here, though, is to educate those out there looking to buy their first house or maybe their first investment property and finding the way to finance that. I don't want to discuss, the best timing to buy a property. That's up to you guys, because life throws you curveballs and you have to figure out the best time for you. I have a video series coming out to help you make these decisions, so stay tuned for that coming in about a week or two. But what we want to talk about today is the financing piece of the puzzle. What direction are rates going and the economy going to maybe give you a good entry point on to buy one of your first properties? Okay, so let's dissect that. So what we want to talk about today is the Federal Reserve. Why the Federal Reserve? Well, they're the ones pulling the strings on everything. They're the ones basically making rates go up to 7%, a rate that we haven't seen since the 90s. So what we want to talk about is why and what's going on. So let's first put into context what the Federal Reserve does. Their mandates are this: price stability, aka inflation, and the other piece of the puzzle is jobs, full employment in the economy. So let's dissect those two elements right now today, just based on the economic calendar news that we got so far this week. So I wasn't here this week, and this is my first day back, so let's go over what we missed so we can actually grade how the Federal Reserve's doing based on just the economic news this week alone. So let's get over to it. The first piece of the puzzle we see here is on Monday, the manufacturing index. Let's skip that for right now because that's more of an economic number and so forth. I want to explain to you guys the housing piece of this puzzle. So the first thing we come to is the JOLT index, because remember, the Federal Reserve has two mandates. It's jobs and inflation. Okay, the JOLT index is how many job openings there are. Okay, how many jobs need filled. Okay, well, the previous reading, if you see on the screen, was 11.17 million jobs were open. Look, there's over 1.1 million jobs vanished. Okay, well, why? What's going on? Well, the Federal Reserve basically wants to crush employment next. The Federal Reserve has come out and said, we want the unemployment rate to be between 4 and 4.5%. Well, it's currently at 3.7. So they have some work to do there. It's for a lot of people to lose their jobs. Right here, the employment sector is helping because they've actually pulled over 1 million jobs off of the market. Okay, so that's number one. The next piece of the puzzle is the ADP report. I'm not going to go there because their numbers are horrendous. They're never on target. I don't even know why they do this anymore, but they came out, they said the previous reading was 185,000. They expected 200,000. It came in at 208. So I'm just going to disregard that right now because I don't like that number. Crude oil inventories, that's another piece of the inflation number we're going to get back to in a second. But let's get to the initial jobless claims. Now, these are the people that filed for the first time ever. Okay, so again, we're talking about the employment numbers. The number that came in previously was 190,000 initial jobless claims, people filing for the first time. The expectations were for 203. It came in at 219,000. Okay, so up from 190, it's now at 219. Plus, 1 million jobs have come out of the market. So is the Fed doing a good job there on driving up unemployment? Yeah. But they're screwing up everything, trying to fix the economy on the economy they already broke. Okay, so that's the employment numbers. So now let's get to the other inflation numbers. In that area, you say, well, I'll say hurricane and Saudi Arabia. Okay, so let me just put these two in context. Saudi Arabia just announced yesterday they're going to cut oil productions, and all of a sudden oil prices are starting to spike. They're up 10% just within the last 2 or 3 days. What happened is President Biden went over to Saudi Arabia begging and pleading for them to increase production, to give us a little bit of ease at the pump here. Basically what they said is, we're not going to do it. So they actually turned around and cut production. Okay, so that's going to hurt there. Then we have the hurricane. Okay, the hurricane. Let's just focus in on this. Let's microscope on this. Hurricane Ian just came through Florida. I was just down there. And on the west side of the state, it got demolished. I mean, we're talking demolished. And God bless everybody. Hopefully everybody's over there is okay. What's that going to do for all raw materials? Because now we already had a housing shortage. And now between the administration that we have and the Federal Reserve, they raised rates so high that they're crushing the housing market. But we had a short relief on that because now what's going to happen is we're going to have to rebuild basically the west coast of Florida. So what's it going to do for lumber? Out the roof. It's already up 6% in the last 2 days. Steel, concrete, labor. How are you going to get to a 4.5 unemployment mark when you're going to need substantial amounts of labor, especially just in Florida alone, to rebuild the whole city, to rebuild the whole West Coast? So when I give the Federal Reserve and the federal government a grade on all this, they flunked. Okay, so let me give you my context of what I would be doing in this market, because you guys come to me for advice. Would I be buying today if I had to? Okay, here's what I mean. If my lease is up in November, December, and I have to move, I would still be a proponent of buying. And I looked in Florida, where I live down there as well. I looked all over the place. There is affordable homes out there. Well, maybe you don't want to go from a 1 or 2 bedroom, 2 bedroom, 1 bath apartment, 800 square foot. You want to go to a 25 or 3,000 square foot house, maybe you're going to just have to settle a little bit less. But another piece of that puzzle is the rates. Well, you're going to have a reprieve next year. I'm pretty confident of that, because a recession that we're in right now is actually going to be stated by all the channels and all the economists, probably in Q3 or Q4 of this year, saying, yeah, we're in a recession, or we were in a recession. Okay, so when that happens, normally what happens in the last 6 out of 8 cycles, mortgage rates went down 1 to 1.5%. So if you have to buy, I don't think you're going to be in a high interest rate mortgage for a long time. What I would do personally, I would wait it out, wait till about December to come into the market, depending on where I want to live. Like if I wanted to live on the west coast of Florida, that would be out of my plans right now. But I would wait for November, December of this year to start putting my toe in the water, to feeling out what I can buy. Okay. Then come Q1 of 2024, I think we're going to have an implosion of the whole country, and rates are going to start coming down and things are going to subside a little bit. That might give you a great entry point into this market. But if you have to buy, as long as you're going to be in that property 3-5 years, but it depends on where you are. Are there going to be some markets that see maybe a 25-30% reduction? Yeah, but I'm still not a proponent of a crash, because you see some of these markets up 30% since last year, year over year. So if they give back just 1 year of appreciation, I don't consider that a crash. So it depends on where your market is and where you're looking to buy. So that's that. So let's get now over to what mortgage rates are doing, because that's why you're here. So let's get over to the context of this. The first thing we want to see is where mortgage rates are. So again, these are mortgage rates. They're not my rates. These are published by Mortgage News Daily on a daily basis. These are the top 6 products people use when they buy or refinance their property. Okay, so they go across here. We are a smidgen, just a smidgen away from 7% on the 30-year fix. We're going to hit that today. I guarantee you. Why? Because my little crystal ball is telling me we are. So this is what you're seeing on your screen right now, is the MBS market. It's a bond that trades on Wall Street. What you're seeing here is the price of the bond. So let me just give you this in context. This simple, just remember this simple terms. When you're seeing this number, if this number is down, the minus 25, that's bad. That doesn't mean rates are going down a quarter. That means the price just went down 25 ticks, and that means the yield, or your mortgage rate, is going to go up. And it's probably going to go up at least 0.1 to 0.125. So if you add that back to where we were here, we're going to exceed 7% today. So don't mean to end on a gloomy note, but let me give you some good sites. If you're looking for a mortgage, you're looking to buy, looking to build, we have a 6 months and 1 year construction loan if you're looking to build on that. If you're looking to buy right now and you're like, rates are all over the map, I'm really concerned with what's going on, how about if we lock you in while you shop? We call it the lock and shop. So we have all these products available for you guys, as well as the 2-1 buy downs and reverse mortgages and debt coverage ratios and all kind of mortgage programs. If we can help you in any mortgage need, please reach us at therateupdate.com. You can find out more about me and my team at that website. You can also, right behind my head, book a meeting. That'll open up our calendar so we can do a one-on-one consultation with you. We have a chat bot, so if you're on here right now and you want to ask a question, we'd love to answer that. And there's so much more here that you can find out and be educated on. So thanks for watching, guys. I greatly appreciate it. All I ask you to do is, if you like my videos, give us a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. One other piece of the puzzle that a lot of people are finding us on is podcast. We're putting all this data on podcasts, and that audience is growing and growing and growing. So all you need to do is, when you're on your favorite podcast, whatever that is just Google or search in there Dan Frio or The Mortgage Update with Dan Frio, and you'll find me truly. So thanks for watching, guys. Take care. I'll see you tomorrow. Bye-bye.